Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Hello everyone, welcome back to Broker Daily Uncut. Your host Jack Campbell here, joined as usual by Phil Tarrant, Alex Whitlock. Feels like a while since we've all been sat down together. It's been a busy few weeks.
Yeah, it is. I think you've been, you did a couple of podcasts at the Better Business Summit, so you've swapped us out to publish shows over the last week or so.
Yeah, it was good. I had Paul Finley from Cloud Staff jump on, and Lizzie, our partnerships manager, she jumped on as well for her first podcast. She did very well. We were just sort of chatting through the day, what was going on, and then I got two brokers to jump on with me, Candice Joseph from Entourage and Lisa Bridget from Stellar Finance, chatting around opportunities, challenges for 2025. It was good to hear from people on the front line, what's been going on in and around the industry. Did you get a chance to listen to that one?
I haven't tuned into it yet. I just spent an hour in the car and I was listening to another podcast, so nothing around mortgages this morning.
Well, there's plenty to dive into today. It's been a busy few weeks. As you would have seen yesterday, don't say we're not on the ball. Dropping news on a Sunday with the Labor's plan to provide 5% deposits for first home buyers and them being exempt from LMI. So as we gear up for the election, there's still a lot more policy changes coming in. That one was a bit of a controversial one, I suppose, because it's supposed to be the caretaker period, right? And they were continuing from both sides to drop some policies. But a win for first home buyers, seeing some added attention. Did you see that one, Alex?
Yeah, I was impressed with that. As an offer to first home buyers, very tangible. I think it's up to $1 million, is it? The 5%?
I didn't see in the release, but could be.
I have a feeling it's. I don't know. Maybe I'm wrong. I had a feeling it was purchased up to $1 million. I might have my facts wrong there, but it's. You're talking about a very affordable chunk of money now for first home buyers, and with that LMI costs on top of that as well, it should be within the grasps of most first home buyers. I'm not suggesting that every single first home buyer has got $60,000, $70,000 tucked away in their back pocket, but I think in most instances, through the assistance of family, that's something which is in the grasp of most people.
Yeah, and I don't know whether it's because I'm in and around the industry now on Broker Daily, but it seems like in the lead up to this election, the parties and the banks have been going pretty hard with policy changes to support first home buyers. Is that new, or has that always been?
We telegraphed this
cycle?
6-9 months ago when we said this will be an election which will be fought hard on housing policy, and we're seeing it play out right now. I think over the weekend, the coalition government announced they'd implement some sort of tax savings where you can claim part of your interest as a tax deduction as a first home buyer, sort of moving forward. So everyone's out there coming out with all these policies with a view towards getting more Australians in their first home. What I would say around it all is, yes, it's good to see all these policy implementations or suggestions, but no one's really put a frame of reference I've seen around what actually means to be a first home buyer. I'm selling a property right now in Mount Druitt. It's a 2-bedroom apartment, walking distance to the train station, across the road from a big shopping centre, Westfields there, and it'll probably sell for about $330,000. It's a 2-bedroom apartment. Now, echoing Alex's sentiments, I would argue that that is accessible for pretty much. If you've got a job in Australia or in Sydney, you can be a first home buyer. When you break it down and you look at the breaks you're getting with, no LMI or stamp, you're not paying stamp duty, you're getting 5% borrowing, et cetera, et cetera. Being a first home buyer is absolutely accessible for most working Australians, most working people in Sydney, young people. But no one is giving a frame of reference to this, because no one wants to live in a 2-bedroom apartment in Mount Druitt when you see this narrative around what it means to be a first home buyer. Everyone wants a 5-6 bedroom home in a place where it costs $1.5 or $2 million. So that's the reality world we live in. Hopefully someone will actually start talking common sense around it. And I tell you what, that $330,000 property in Sydney, close to a train station when you get to work, they exist all over Australia, albeit even cheaper.
Yeah, Well, I mean, as we've talked about on this show before, I'm approaching my journey into home ownership.
You could buy that today.
Yeah, well,
You could do.
I'm certainly not buying in the city.
You're trying to sell your property to Jack, are you, Phil?
Trying to, mate. It's cheaper than a real estate agent. Broker Daily Uncut.
Well, I'm looking out in Penrith. My girlfriend's from Penrith. I'm from the Blue Mountains, so pretty central for both of us, where our families are. It's going to be a bit more of a commute into work,
You'll be able to buy a
affordable.
2-bedroom apartment in Penrith for under 400 grand. No worries.
Yeah, well, that's what we're looking at. So,
there you go.
Yeah, you just got to be a bit more realistic with it, because we certainly aren't buying in the inner city. But I know people who are 60 years old who
seriously, Mount Druitt's a great place. I got an apartment. You can buy that.
I don't know. You're trying to sell it to me now. Can I lowball you?
Go on, give me a price. It's on. No, it's just, and these are areas that if you, whether it's Mount Druitt, whether it's Canterbury, where it's Liverpool, whether it's all over Sydney, these places exist. All over Sydney.
A bit of a shout out to Mount Druitt. It's got a lot of heart, that place. I've been there a few times. I've got some mates that grew up around there. It's a good area.
Mount Druitt's a great place.
Yeah, I'm sure you'll find someone to buy it. I don't know if I will. I've got to get my funds in order, and if I agree to purchase a property, my girlfriend will wring my neck, I think.
Mate, go back to your desk after this podcast, get your calculator out and work out what deposit you'll actually need on that basis. And you'll sit and just go, oh, okay, that's actually manageable, or it's a realistic amount you can save. Now, this is a podcast for mortgage brokers supporting young people into property, or anyone into property. But, this is the frame of reference. Let's start talking about this. Your first home doesn't need to be a $2 million home.
Exactly right. Well, if anyone wants to purchase Phil's property, reach out to me, editor at brokerdaily.au. I'll put you in contact. 2-bedroom apartment in Mount Druitt. It's up for the taking. We'll just throw to a quick break. We'll be back after this. And we're back with Broker Daily Uncut. I mentioned last week that I had a good chat with a couple brokers, and they were placing tech and regulation as the opportunities and challenges for 2025. I think ever-changing regulation was placed as a top challenge. It's becoming a lot harder to manage, especially when you're working across commercial and residential. It's just constantly changing with laws, regulations, things like that. And tech is an opportunity, not just to help them streamline approaches to how they handle their business, but also to help them through all these changing regulatory changes that are pretty constant. So good to get out there and chat to brokers about what's going on and what they're looking forward to in 2025. Did you get a similar vibe when you were down at Better Business? Were people talking about the same thing?
I must admit that I didn't speak to too many brokers when I went down to Better Business. I did speak to some brokers of the evening at the event, and I didn't talk around tech. It was mainly sort of just swapping notes on what sort of volumes they were doing at the time. But, regulation, legislation is always going to change. It doesn't. I'll tell you one thing, it never keeps up with technology. Regulation and the rules in which the government wants us to operate within always lags technology. So some of the biggest issues you have, and you'll see this in broker space or elsewhere, is that you'll have new ways for doing things, new technology to support it, but, whether or not you can use it or not, this is a bit of a thing. I saw Alex on a thing the other week. Alex, you could probably speak to this, where I think you made reference to a very similar thing. It was around real estate transactions for rentals, but you made a very, I thought, erudite commentary around this lag of innovation when it comes to technology and regulation.
Yeah, look, it doesn't matter what sector you work in, innovation is always ahead, and then regulation will take its time to understand what the changes are and make its own mind up about how that's managed and what kind of governance it requires. I think in terms of payments in real estate, it's probably a bit more bleeding edge. I think in mortgage broking regulation, I think it's an industry that's been around. Mortgage broking's been around for 40 odd years. I think that regulators it's more tweaking and nuancing around broker regulation. And I'm not up to speed with any of the latest changes or reviews in terms of mortgage broking. The bottom line is with mortgage broking though, compliance it's just a weight on every broker. And I'm not saying that compliance is not a critical part of mortgage broking. It's a very valuable part of mortgage broking that makes the mortgage broking proposition what it is. But it adds cost, and it adds, a burden to brokers, the more compliance there is. You don't want compliance for the sake of compliance or regulation for the sake of regulation. I think as long as you're focused on the best outcomes for borrowers and the role the brokers play in that, then it's an important aspect of the proposition.
What sort of regulation were they sort of having concerns or frustrations with?
Well, I know APRA and ASIC have been coming out with stuff pretty consistently. There was the HEX and help deck guidance that CBA seem to have implemented. Not sure whether they're
Isn't
the
it
first
just
major
policy stuff? Isn't it just policy changes in relation to changes to laws and legislation? So is it keeping up with the changes? Is the issue?
Yeah, keeping up with the changes. If you're operating across commercial asset finance, mortgage broking, it's pretty constant. All the policy regulatory changes, especially in the lead up, as we said, to the election, where stuff's coming out every day. It seems like there's a new type of policy change coming out that people have to keep up with. I think it's just a bit of a stressful time. I've heard that from many brokers I've been talking to. We talk to them pretty consistently on Broker Daily, as is in the name, and they all agree that keeping up with the changes can be
You think about that,
chaotic.
if brokers, have to invest time, energy, and effort, and it's frustrating trying to keep ahead of legislation or what the policy changes are, which is very much the role of a broker, is to understand the borrower's circumstances and put them in the best product. Like going directly to a lender must be mind-blowing for your average borrower. But I say that the Smart Property Investment, which is connected in with Momentum Media, it's a big platform for property investment. We did a reader survey on that, or a listener survey or viewer survey, because most of our eyeballs come through video or through listening on podcasts. How many people, like, it was misrepresented, how many people still go directly to a lender versus the numbers you hear now banding around, 75% of all new loans going through a broker channel. It's much higher. It's much higher through the investor space. And I was like, it was like 40% of investors are still going directly to a lender in order to get financing, which I found strange. I would have thought that it was a bit more of a sophisticated listener base who are dialed into using and leveraging.
Maybe Phil, but maybe also with some of those investors, maybe they're going for private lending solutions. I don't know. It's a bit hard to kind of assess.
You just need to be for
both, it can go both ways. You have some investors that go to their own private funders, as you'll know, through your relationship with, some of the big investors that we both know. They'll use private funders to fund big gaps that no lender would touch, and there's very few brokers that would understand. So it's kind of
a fair point.
Yeah, it's a smallish sample market, but I guess that most people I talk to anecdotally go to a broker. I don't know, the MFAA figures, they've been consistently reporting on the figures over a number of years, and I reckon if there was any real big anomaly in them, someone else would have called them out by now. I think it might be a bit skewed with the really, really sophisticated investor market.
Maybe. That's it, though. Again, it was the feedback we've got, and it's the reason why you should do your own sort of market intelligence, was, you end up in a bit of an echo chamber where your perspective of things you think is normal, but most property investors, and they filled out this survey, most of them are over 50, and most of them, inverted commas, had sort of like 2 to 3 properties, which is very normal, very normal. So anyway,
well, you think they just didn't want the back and forth of dealing with a broker? They just wanted to get it over and done with a lender, or
I don't know. I need to still scratch the surface and understand it. I've only had a fleeting look at it.
I think it's an interesting situation. So I'd used, my first loan was with a broker. When I came to Australia, I was recommended a broker. That was useless. I wanted to refinance 2 properties in Melbourne to purchase another property. The broker was hopeless, didn't get back to me. So I ended up walking down in St Leonard's into the ANZ branch, and I got that loan with the ANZ branch manager, who was absolutely outstanding. And then when I came to make my next purchase, I walked back into the St Leonard's branch, and guess what? She'd moved. And I was totally unimpressed with the new bank manager. And that's the only direct bank loan I've taken out in 30 years of buying property. So I think where am I going with this? I think if you've got access to a consistently reliable professional, be that a broker or a bank or non-bank lender directly, why would you change it? I would have stayed with that same. I would have probably done all my loans with ANZ. I would have done all my loans with that person because she understood. First of all, she understood my needs, and she was secondly an incredible communicator and just very, very easy to deal with. But hey, maybe she's a broker now. I don't know. So I think, yeah, you want to deal with, it's a people business, and this is the whole essence of mortgage broking, and above and beyond getting the right outcomes, being good with your customers and being there, reliable and present. And without digressing too far, I do a regular podcast with Jason back from Broker Essentials, and the real value is being a constant and reminding your borrowers, not being transactional in terms of getting the loan done and then moving on to the next deal. Having a really good system for staying in touch with your customers will ensure that you will be the first point of contact, because why go somewhere else if it works?
Yeah, and it's interesting how one good or bad experience can skew your perspective, pretty much immediately. As you said, if you had got a good experience with ANZ when you walked into the branch, next time you wouldn't have reached out to brokers, and who knows, maybe Broker Daily
Jack,
wouldn't be here.
I'm going back to 2001, and I was recommended a broker from, I worked in media in and around mortgage broking, right? And I was recommended a broker. I won't mention any names, but the broker, he came along to the office and did he gave me a bit of a spiel, which he didn't really need to do. I was going to use a broker anyway. I'd got 2 loans and I never heard from them again. And I chased him up and he just disappeared. It was pretty crazy. And then of course I wasn't going to go back to the same person for another referral for another broker. I went, stuff it. I'm going to walk down the road and go walk into the nearest bank. And the ANZ bank was the nearest bank. And that's how that played out.
Yeah, well, lesson for brokers, stay on your toes, keep your clients happy, and they will come back for more. We'll just throw it to another quick break. We'll be back after this. And we're back with Broker Daily Uncut. Alex, you were saying to me before the show, auction rates, they were pretty high this week, right? You wanted to dive into that?
Oh, look, I think auction rates depend really they're very cyclical. So we're in the run up to Easter. So I think traditionally this time of year they are, there's quite a bit of activity around the auction market. The weekend that's gone wasn't any different. I think there was something in the region of about 3,100 properties taken to auction. I seem to remember looking at the figures that Melbourne had the greatest number of auctions, just about 1,400. Sydney had a slightly lower number. I think just over 1,000, maybe 1,300. But the clearance rates are coming off somewhat. Sydney was lower than Melbourne. I think all the stuff that's going on environmentally around Trump's tariffs, and there's a lot of confusion. We've got an election coming up. I think it's just. I think people are looking. I think buyers are looking. I think a lot of vendors are still a little bit unrealistic about, sort of what the real sale price is. So I think a lot of properties are getting passed in. Whether they sell, sort of post auction, I don't know. But there's 3,100 taking place this weekend. Obviously, next weekend is disrupted. I'm not sure what. I don't think there would. Are there auctions next weekend, Phil, during Easter weekend? Or
yeah, there is. A lot of people think it's a death knell to auction on in the middle of a public holiday. They go, oh no, why would you want to auction in?
Oh, you know what?
Easter? But I think you auction off.
You're right, because I'll tell you. Last Easter, I sold my property on the Saturday. Right bang smack in the middle of Easter. And the agent that I use, William Chan from Chan Yal, he had so going back 12 months ago, the market was pretty patchy back then. I'd already purchased, so I'd bridged the gap and I need to sell my property. He went, Alex, sell it on Saturday. He said, and I went, and I sort of, made the obvious, or isn't that bang smack in the middle of Easter? And he went, there are so few properties on the market during that period of time that you have a real chance to sell. And he sold it. He went about $350,000 above, or more, probably $400,000 above reserve. And he had 2 really solid buyers, and they bid and bid and bid, and it got a great result. So
Those buyers, if they're looking to get into the market and they're focused on that, they'll give up any plans for a long weekend somewhere to buy a property, right? Particularly with the competition.
Last year by memory, it was a really weird. There were the school holidays, and then there were Easter, and there's a funny little gap in the middle.
Yeah.
He actually sold it in that weekend. That was a funny little gap in the middle. So yeah. So
I think what is happening right now, and to Alex mentioned Trump's tariffs and the dislocation of financial markets, particularly share markets, over the last week or so. One of the consequences of that is that there's a lot of discussions now. And I think NAB has actually came out and said this, but that they're expecting more interest rate cuts this year, more than what was originally viewed. And there's some people banding around potentially 50 or a 75% cut the next time the Reserve Bank gets together, which I think is early in May. So there will be a lot of people sitting out there, and I'd like to know what brokers are saying about this, because 50 basis points or even 75 basis points is really going to change the serviceability for a lot of people.
Yeah, well,
so they're probably sitting there waiting to see what happens, because it might change the suburb they're buying in, or it might change the type of properties that they're buying.
But there's a layer of complexity above and beyond that. You're absolutely right, Phil. And I think we look at it through the paradigm of being existing property investors and existing property owners. We've been in the market for a long, long time. I think there's a lot of people that are going to go, I don't know what the certainty is around Australia, around the economy, about the impact on Australia on on sort of a macroeconomic position. And yes, interest rates go down 50 basis points, 75 basis points, maybe even 100 basis points over a number of cuts. But there's a good reason why the RBA is cutting rates. It's not to put more money in investors or home buyers' back pockets. It's because there are real threats to the economy. And I think it's going to be very interesting as this all plays out. You will definitely get buyers that are in a position to take advantage of lower interest rates, but you're also going to get buyers that are going to go, hang on a minute, I'll just wait a little bit longer and see how much further they go. So I think you're going to be in a very interesting market. What I would say for our audience of mortgage brokers is, this is what you need and this is what we want, because you end up in a position where you open up refinancing again, you open up conversations around existing mortgage holders, which particularly for established brokers, you're going to have brokers that are going to be on your book that may want a conversation, but you've also got everyone else out there that you haven't yet connected with that will be thinking about their home loan, and you have an opportunity through your marketing, through social media, through your presence in your local marketplace to start really looking at connecting with new customers where either the existing bank or another broker hasn't been quite so nimble.
You look at the fear that the last week or so in financial markets globally and also Australia can instill in people. So imagine you're gearing up for your retirement and you've chucked all your money into the share market, and then in one day you have the biggest fall in 10 or 15 years or so. And this goes to the point when it comes back to policies and regulation. I think one of what Labor's trying to install is a tax on the unrealised gains inside of your super fund. Okay, what do you think if your wealth can change so rapidly because financial markets collapse so quickly, and you're taxed on an unrealised gain that doesn't exist, and or you're taxed and then you lose the value of your assets inside of a super fund? Like, it's a big deal. So it's probably why auction clearance rates were a bit humdrum. There was a lot of scar tissue as a result of that. A lot of people still.
There's a lot of fear.
Yeah, and the markets did bounce back. But it just goes to show the volatility of it.
But markets are volatile because nothing's really been quite set. No one really quite knows where we're going yet. And a different situation, which was the GFC, which was far, far, far deeper. And it wasn't around policy. This was about, systemic failure. But pension funds were decimated. You've got people, as you say, coming up to retirement or in retirement that suddenly find themselves with half the money they had before. There is still a lot of posturing, and there's a lot of politicizing, between, America. There's some deep fundamentals why Trump is going where he's going. And I'm not going to get into the fundamentals around tariffs and what impact that will have on America and American self-sustainability. But the bottom line is, you've got China's dug its heels in, it's fighting back hard. The ramifications for us in Australia are pretty significant. Now, this may all change. You know what Trump's like, suddenly changes his mind and everything, and the sun starts shining again. But there's going to be some interesting ramifications around this, Phil, longer term, because again, you start to go, well, hang on a minute. if I've got my money tied up in shares, be it through managed funds or in direct investment in shares, and suddenly overnight, I've lost 40% of my investment. I've got some shares that have gone down 60% in value as a direct result of this. There's some speculative shares, but even my blue chip shares have gone down a long way, right? So I think you're going to start getting a bit of a shift in mindset in where is my money best housed. Now, there's a lot of negativity around the property market. Property prices are very high. There are some inhibitive and some pretty crazy policies from local governments around land tax and so forth. However, the overall value of your asset in property isn't going to budge a great deal, amid global turbulence, sort of turbulence in global markets. So I think you may get there's going to be, I wouldn't be leaping to any conclusions anytime soon, but with interest rates looking like they're going to come down, with some fundamental concerns about the impact about instability on share markets and global markets and currencies and whatever you want to put your money into, I think you may get a longer term shift back towards property potentially, but it isn't going to happen soon. People aren't going to be flocking to the market just because rates have dropped.
Yeah, well, I find when speaking to brokers, regardless of how big the drop is, like we had February, the first drop in 4 years, and they said borrowers were coming in immediately. Obviously, they haven't seen the tangible impact of that rate cut, but just the headline saying that they've dropped has people coming back into the market. So I imagine, as you said, with NAB predicting a 50...
NAB came out, right?
I'll have to double check, but I'm pretty sure NAB came out with a 50 basis point prediction for the May cut, which I would imagine people are going to come flocking in, and it'll be a busy time for brokers.
You'd be surprised, the RBA came out and said, hey, everyone just take it easy a little bit. It's way too soon to actually make any decision around this. So.
Well, I think that was, just reading, but I think that was about like emergency pre-meeting kind of knee-jerk. I don't think it's necessary that we are or we aren't going to change rates. I think there's this massive panic. But here's the thing, right? You've got to look at the balance. So you've got to split buyers and borrowers down into their segments. If you're a first-time buyer or an investor, you're probably going to get into gear a lot faster because you're not encumbered by an existing property. If you own a property and rates come shearing down and there's turbulence in the real estate market, and suddenly I can buy something more attractive because prices come down, guess what? My incumbent property is also going down in value and I've got to sell it to somebody else. So you've got to consider how different environmental, economic, and interest rate changes impact different cohorts. So I think it's going to be the era in the short term of the first-time buyer, given the policy promises that both sides of politics have given. That's very, very good for first-time buyers. And then given now, the potential to buy. And if you're buying from, you've got to look at what stocks on the market. If you're buying from an investor, or if you're buying from, somebody that's looking to upscale, those prices are going to affect everyone. So first entrance in the market, it's looking pretty good. Or first entrance from an investment perspective, I'd say it's looking pretty good. If you're looking to kind of sell your own home, unless you're changing regions, you're probably going to get affected by the same market factors that are affecting the property you're looking to buy.
Yeah, well, we'll be keeping across it all on Broker Daily. Next RBA decision will be on the 20th of May, so a little over a month. We have the election fast approaching, so tune in to brokerdaily.au for all that content. If you want to reach me directly, editor@brokerdaily.au. Thanks for listening.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.